In this video, I'm going to share how much dividend income I made in January from my $205,000 dividend growth portfolio. Spoiler alert, it was my highest month of dividend income ever. I made $626.01 of passive dividend income from my investments. Today, I'll break down how I made that money, from which stocks, and then give an overview of my investing strategy. After that, I'll project out the future growth of my portfolio to see how long it will take to reach financial freedom. It'll be really interesting to see what kind of dividend income I could be generating in 5, 10, 15, and even 35 years with no new money added to my portfolio. All I'll say is that a little compounding machine has been built, and I look forward to growing that with you guys here in the future. So let's dive into the analysis, but first, let's roll the intro video. My name is Zach, this is Dividend Data, and if you're a new viewer joining us, we cover all things dividend growth investing. I've been sharing my personal dividend portfolio on this channel all the way back since May 2020. Back then, it was only $30,000. Long-term viewers know that I have learned a ton along the way that I share with you guys, and you get to watch my strategy evolve in real time. So if that sounds interesting to you, then hit subscribe. Throughout, I'll be using the best stock research tool for dividend investors, dividenddata.com. This gives you all the resources to find quality dividend stocks, analyze their financials deeper, including vital dividend stats like growth rates, history, payout ratios, etc., and then track your progress towards financial freedom. Dividenddata.com is the all-in-one resource for dividend investors. And right now I have an exclusive limited time offer where you can get a 7-day free trial of dividenddata.com. This offer is only available if you click the link in the description and pinned comment of the video. And I don't usually have a 7-day free trial, so get it while it lasts. I don't know how long it will be around. But with that said, let's dive into my personal dividend growth portfolio. Let's take a quick look at how the overall stock market has been doing. Well, there's a lot of perception that the stock market has been booming since the election. It has actually been selling off lately, and we're entering a period of fear. As of January 16th, we're at a 28 out of 100 on the Fear and Greed Index. Over the past month, the S&P 500 index is down 2.43%, and over the past 6 months, we're only up 4.86%. But we need to keep in mind that we're coming off of 2 back-to-back years where the S&P 500 was up over 20%, which is incredibly rare. So in my personal portfolio, I've actually been very cautious when it comes to buying over much of the past 6 months. My main purchases in my dividend growth portfolio were Alphabet and Salesforce, and while there was some new money added, a lot of that also came from rebalancing and selling a few of my older positions. And if we go back and look at my old portfolio updates, you can see the account was around $181,000 5 months ago and got as high as $205,000 at the start of December. So like the broader market, I've seen a little bit of a sell-off through the month of December and early January. My current total value is $200,588. To fund this account, I've invested $123,444, which gives me a total return of $77,143 or 62.49%. So while the market has a little bit of an attitude towards fear, I actually feel pretty good about my account and my financial future in general. My cautious behavior over the past few months has actually allowed me to build up a little bit of cash, and now there's starting to be some interesting buying opportunities. So stay tuned because you may see some buys in upcoming videos. And I might add that in our Discord community, there are some people buying pretty heavily in this recent sell-off. We got some whale mega buys here as well. By the way, you can get access to this Discord community of investors when you join dividenddata.com. So use the free trial linked below if you want to try it out. And if we go and look at my watch list, there's been some stocks selling off I find pretty interesting, some of which I've made videos about as well, like Hershey, and then some others that I'm actually diving in to do some deeper research on, and I don't even want to share with you guys yet, but you'll know in the future if I start a position. So why do I feel so strong about my account? It's because I've built up a compounding machine that has growing dividend income. Even though I haven't bought any new stocks recently, I earned $626 of dividend income this past month, which I reinvested. That was my highest in 1 month by far. And I reinvest this to buy more shares, increasing my future dividend income, allowing me to buy even more shares in the future, creating a dividend snowball effect. So what were my dividends this month? To start, I got paid $14.17 on January 2nd from Automatic Data Processing, ticker symbol ADP. This is the smallest stock in my dividend portfolio, which I bought a little bit of in 2023, and I have a 42.96% total return. If we look at the stock analysis tool, you can see this is a company with growing earnings per share over the long term, leading to increasing stock price growth as well. They also have very strong free cash flow per share, and this leads to a history of consecutive dividend increases. The most recent dividend increase was 10%. The second stock which paid me a dividend this month was Salesforce, ticker symbol CRM. They paid $15.20 on January 9th, and Salesforce is actually one of the newest stocks in my dividend growth portfolio, and they are actually a new dividend payer as well, which is somewhat rare. I don't usually buy companies that just initiated a dividend payment, but I actually made exceptions with both Salesforce and Alphabet, and in the future I may make an exception with Meta as well. And that's because these big tech companies are extremely high quality business with fast growing earnings and free cash flow. And that's because these big tech companies have fast growing earnings and free cash flow, and a lot of this is going to flow into dividends and share repurchases over the long term. And we will see an interesting test coming up soon with Salesforce of whether or not they decide to increase their dividends every year on an annual basis. I definitely think they have the capacity to, so I hope they start that practice. But this is an important thing here where I want to emphasize that we're investing in businesses here, and all a dividend is them paying out a percentage of their profits back to shareholders. So by investing in ADP, Salesforce, etc., you have your ownership in the stock, and then they pay out a percentage of profits back to you for being an owner. And depending on the price you pay and the amount of dividends they pay out to shareholders, that will impact your yield. And in my portfolio, I have some companies with very low yields that grow their dividends very fast. And then I have other companies with very high yields that pay out a large percentage of their profits as dividends, and then they grow a little bit slower. And for example, my third dividend that was paid this month was from the Altria Group, ticker symbol MO, which is one of my highest yield stocks and my largest dividend payer. And I just got a record payment from them of $559.05. That was on January 10th, and that was my biggest dividend payment I have ever received. Since I've been tracking this since I started my position in 2020, you can see that dividend grow from $6.71 all the way up to what it is today. And just in the past year, I haven't even added to my position that much other than reinvesting dividends. And my dividend income has grown from $464 a quarter to $559 a quarter. And there are two main reasons that happens. One is dividend reinvestment. I reinvested all $559 back to buy more Altria stock. That got me an additional 10.9 shares of the company. Given that their current annual dividend is $4.08, that increased my annual dividend income by another $44.40. And while that may not seem like a ton, it's doing that every single quarter. And in my 4 years of owning Altria stock, I've now earned 95 shares from dividend reinvestment. And that has boosted my yield on cost from 9.51% to 11.45% based on my initial investment in the company. And the second factor for why my Altria dividend keeps growing is dividend growth. And that's because Altria is a growing company with growing earnings per share and free cash flow. You can see this past year, they increased their dividend payment by 4.08%. Some of you don't even get 4% raises at your job. The 5-year compound annual growth rate of the dividend is 3.96%. So this combination of reinvesting dividends and dividend growth is a very powerful formula to grow your dividend income. And despite a lot of people thinking you can't get a good total return with high yield stocks, I would argue differently. What matters with these, since they're lower growth, is the price that you pay. And I have gotten a very good price over the years on Altria stock. So my total return is currently 43.63%. And many would argue Altria is still somewhat attractive to buy now with a 7.97% starting dividend yield. I was getting a little bit spoiled with that 9.5% yield, but I actually am considering adding new money to this position as well. And for newer dividend investors, the current dividend yield is based on the stock price right now. So it'd be the $4.08 annual dividend divided by the current stock price of $51.16. So basically how much dividends you get now for what you pay, and then your yield on cost would be based on what you actually bought the stock for. So if we look at the example of ExxonMobil, which is my second largest dividend payer, the current dividend yield right now is 3.56%. But that's not my dividend yield because I didn't buy it at the current price. I bought Exxon during 2020 and it was one of my best investments with a 230% total return. And I got it at a 9.68% starting dividend yield on cost. And from reinvesting dividends, that's gone up to 11.77%. So in my portfolio, I have a combination of high yield and low yield stocks. And I definitely have a preference towards companies that will have a better total return over the long term. And usually that comes from high earnings, free cash flow, and dividend growth. And sometimes that's hard to find in a high yield company. But every once in a while, there are these high quality, high yield opportunities. And I will always be looking out for those kind of investments because when you find one of those and it's the right investment, that can be a core pillar of your dividend portfolio for years to come. And Altria and ExxonMobil certainly are that for me. The fourth stock that paid me a dividend in January was the Walt Disney Company, ticker symbol DIS. They paid me $37.59. That was on January 16th. This is a company which just reinstated their dividend, and it's a semi-annual dividend. That means you get paid twice a year. And it's currently still a pretty low yield, but I expect this to grow continually over time. And the reason is that the financials at the Walt Disney Company are starting to improve significantly. You can see that in Q4 2024, their free cash flow per share almost hit a record high, and they are regularly generating high free cash flow. In fiscal 2024, they generated $13.97 billion in cash from operations and $8.56 billion of free cash flow. And given that Disney's streaming services just became profitable for the first time, this is only set to continue growing in the future. That said, the Walt Disney Company was one of my worst investments ever, but I think it'll have pretty good returns from here. And just a reminder for everyone, you're going to make mistakes. That's part of investing, but you have to keep learning and evolving your strategy. So those were the 4 dividend payments that made up the largest month of my dividend income ever. But what can we expect moving forward? Over the next year, my current projected annual dividend income is $4,619. That's $1,154 every quarter, $384 every month, $12.66 a day, or 53 cents an hour. And here you can see the projected schedule of my dividend income. It's highly variable based on when the stocks I own pay out. Most of them are quarterly, and then I mentioned I have Disney, which is semi-annual. So February will be a terrible dividend month for me, so you likely won't see a video like this in February. And then in March, I'll have $450 projected and $559 in April because I won't be getting that Disney dividend then. The next Disney dividend doesn't come till July. And here you can see all the dividend insights for each of the stocks in my portfolio. In terms of dividend income, I'm definitely highly concentrated with Altria and ExxonMobil making up the bulk of my dividend income. And then my 2 largest stocks, Visa and Microsoft, are actually much farther down the list because they're lower yield. But with dividend growth and dividend reinvestment, they'll move up that list over time. And if we look at all this portfolio as kind of like one stock almost, summing all those up, the current dividend yield would be 2.3%. But based on my cost basis, it would be 3.22%. And from reinvesting dividends, that's up to 3.74%. So as an overall picture, that's not bad considering I have so many low yield stocks in this account. So in my opinion, I have a very nice combination of high quality growth businesses that will continue increasing in value over time, as well as cash flow and growing dividend income. But how will this look in the future? Today, I'm going to forecast 35 years of reinvesting dividends with this portfolio. And although I made this calculator for individual stocks, I'm going to hack it a little bit and basically treat my portfolio as one big stock. So for current stock price, I'm going to put in my current portfolio value. And then for the annual dividend, I'm going to put in my annual dividend income. And I'll be somewhat conservative here and say that my expected compound annual growth rate of the dividend will be 8%. I'll be doing that because I have some stocks which pay dividends that grow at like 4% a year and some that grow at like 15%. And then again, I'll be conservative and say 8% stock price compound annual growth rate. And this is actually below what the market has been doing over the past decade, which is around 10% a year. So I'd say it's high likelihood I hit these numbers, if not exceed them. And let's say that I buy 1 share of this portfolio, which is what I already have. And again, this is only an estimate, but let's project out what 35 years of investment and reinvesting dividends would be like with no new money added, only with that initial investment. So what my account is right now. So here you can see a snapshot of what those results will be over time. And this gives you an idea of the compounding compounding machine I already have built. And it also shows the large impact that reinvesting dividends has on your total value and future dividend income. For example, at the end of 35 years, if I reinvest all my dividends, the total value would be $6.7 million versus if I did not reinvest the dividends and I took them as cash, it would be $3.2 million. But to be fair, you would have earned just under $800,000 of dividends in that time that you could have taken as cash to reinvest in possibly other things or use to fund your lifestyle. But not only does reinvesting dividends increase your total value in the future, it also increases your total annual dividend income. At the end of 35 years, it would be $130,000 of dividend income versus $63,000 if you had not reinvested your dividends. And for context, I'm on the younger end. I'm 25 right now. So theoretically, this would be my portfolio when I turn 60 if I added no new money to the account. At year 10, this would generate $11,300 of total annual dividend income with a total value of $549,000. By year 20, it would be over $30,000 a year of dividend income with a total value of $1.5 million. At year 30, $80,000 with $4.1 million of total value. And then if we play that out to year 35, that'd be $130,000 of dividends with $6.7 million of value. And again, if you continue projecting that out into the future, the results will only get bigger and bigger over time. And this isn't even with that crazy of growth rates. It's only 8%. Of course, you'd have other factors like taxes, etc. But I do think little calculators like this help put you in the long-term perspective with your investments. And it also shows how important time is when investing. It's the number one factor, which is why you have to start investing at a young age. So even if you're in your 30s, 40s, 50s, and haven't even started investing in, you got to start now. You can't keep delaying it into the future. By the way, if you want to use that calculator I was just showing, it's in the extra tools section on dividenddata.com. You can also find links to this in the footer of dividenddata.com. I'll also include the link in the description and pinned comment of the video. But I hope you join me in investing in your financial future and building up your own little compounding machine of investments. And if you're a dividend-focused investor, I think dividenddata.com is one of the best tools to help you track your progress and to determine the financial quality of a business that you're investing in. So if you want to try out dividenddata.com and use all the features I showed today and our AI investment analyst, I'm currently doing an exclusive offer of a 7-day free trial. So you can try it out for 7 days at no risk. This will likely only be available for a limited time, so get it while you can. And to get that free trial, you have to use the link in the description and pinned comment of the video. I hope to see you there, but if not, just keep investing and subscribe to the channel if you enjoyed the video.